All right, Alex. So, how long have you been dealing with silver and gold?
Probably about a decade or so.
Okay, why'd you get into it?
Looking into a means to protect my wealth because of the issues with inflation and the declining purchasing power of the dollar, and noticing over time that precious metals retain their purchasing power, as opposed to the Federal Reserve note, which does not.
So, are you a physical guy? You have to
Yeah,
actually have the metal.
right. I'm not interested in a paper promise. I want the real thing.
So, what do you think about what's happened with it?
It's pretty amazing. I mean, you see the prices going up, but usually, really what that indicates is a lack of faith in the currency itself. It's not so much that the gold has gone up, it's that the dollar goes down.
And that's it's good news if you have it, but I guess it's kind of bad news in a more broader term.
That would be correct. Yes, I would agree. I mean, overall, the economy is better when it's healthy and robust. But at the times when it is not, you need some form of backstop, some form of protection. And so you should have at least a certain amount of your portfolio in physical metal, not just paper metal.
So, why are you a fan of the physical product?
Well, because if you've seen with paper products where people are simply making a promise, they don't have to actually deliver the metal. Okay, they can just give you a payout, and so then you don't actually own it. What you have is a promise, a promissory note, but you don't actually own anything.
So, what are you doing today?
I just came here to do a little exchange because the gold silver ratio is very favorable right now, and so I'm going to exchange a little silver for some gold.
Okay, all right. Is that when you do that, do you go back and forth on it?
Well, it depends upon where the ratio sits. Over time, typically what happens is that when the prices run up, the silver runs up much faster than gold, and the reason is because it's perceived as being more affordable. And so when the ratio increases, then you can buy more gold with your silver.
And that's kind of what you're doing today, I guess.
Right. Just making an exchange of one metal for the other. And then that can reverse. When times get good, then that ratio tends to collapse, and then it favors more silver over gold, and you can exchange it back the other way. So it's possible to make an increase in your overall portfolio by simply exchanging one for the other.
So, as far as IRAs and things, do you recommend an amount to put into precious metals?
I believe right now the recommendations coming out of the big banks like J.P. Morgan and Chase and all those is recently they've increased it to a 20% holding in your portfolio. It used to be 60 stocks, 40 bonds, but now it's 60, 20, 20. And so it favors going ahead and increasing your portfolio. And it's since they've said that there has been quite a run up.
So did you ever think it would hit 90?
No. Well, eventually, yes. I mean, eventually the purchasing power of the dollar erodes to the point where, it's eventually it'll go even higher than that. But it's a matter of time and circumstance.
Right, and it's I've seen since I've been in here, two people have come in selling silver.
Mm-hmm. Yeah, well, because right now, as I said, the ratio favors selling silver, buying gold.
So it's would you recommend people try to get into this? Or?
Oh yeah, I think it's always a good idea to have a certain amount of your money in a physical, tangible product that you can liquidate if you need to.
So I guess you're trading up.
I guess you could say that.
Yeah.
It's so asking about the gold to silver ratio. In nature, gold appears at a rate of approximately 20 to 1 as far as silver in natural deposits. And that had been a ratio that had been kept in finance for a long time. When we went off the gold standard, then that changed. Okay, and so for the last 10 years, it's gone up as high as 110 to 1, but on the average, it's been averaging about 80 to 1 as far as the ratio of silver ounces to 1 gold ounce. But when that drops,
So, continue.
Okay, but when that drops, then the ratio can be as low as, it's been as low as 30 to 1. It rarely makes it back anywhere close to the 20 to 1 that we see in nature. But like I said, in the last 10 years or so, it's averaged around 80 or so to 1. But recently it started to drop, and it's now down to about 50 to 1. So if it, as for illustration purposes, suppose it went down to 40 to 1 from 80 to 1. That means that now your ounce of silver, will, 1 ounce of gold will now buy 40 ounces of silver, or you only need 40 ounces of silver to buy an ounce of gold, whereas previously you needed 80 ounces. So that with a 40 ounce, you can take your 80 ounces of silver that you bought and get 2 ounces of gold rather than buying 1 ounce of gold that would have been the case, over the last 10 years or so. So that's the advantage of watching the gold to silver ratio, is that you can see when it's an opportune time to sell your gold, silver and buy gold. And the reverse is true. When it goes the other direction, then it's more advantageous to go the other way and sell your gold and buy silver. So it's a means to increase your overall holdings without actually investing further, but just simply trading one to the other. So like you said, trading up, that's a fair assessment.
Yeah, so it's, so you're, right now it's 50, right? And then you're doing it in anticipation of it flip-flopping and becoming 80.
At some point, more consistent with what it was over the last 10 years. So the periods of low ratio tend to be short, and they tend to occur around financial crises or things like that, where people move into gold and the gold goes up quickly. People see that, the financial institutions going up into gold, and they see that, they say, well, I better do what they're doing because that's where the smart money is. So they'll go to buy gold, see what the price is, and go, oh, well, I think I'll buy silver instead because I can afford that. And that slingshots silver up above gold, and that's where you get the collapse of the ratio.
So to play this game, you have to be very patient.
Yeah, it takes patience, and you have to stay alert, watching for that to happen. But typically it occurs around, difficult times in the economy, so that kind of brings up your awareness of it.
Yeah. So it's, it's good news if you have the silver and gold, but it's bad news if you don't, really.
Well, and that's a good reason to go ahead and have some, to a certain extent. You don't want to be overloaded in anything, but it's a good idea to have enough that you can use it if you need to.
Yeah, and I've seen that's what people are doing today, coming in and selling.
Yeah.
All right, thanks.
You bet.
So Spencer, I guess it's been an interesting time for you the past, month and a half?
Yeah, actually last couple of months, 2.5 months or so. Which gold and silver have always had a steady flow of increase. But about 2.5 months ago, something happened that hasn't ever happened in the industry when it comes to gold and silver. And that is, the banks have finally gotten behind supporting having gold and silver in an IRA, a 401k, pension plans. And they actually announced back in October that they recommended that pension plans, IRAs, or 401ks reevaluate their portfolio holdings. Historically, they've always been 60% equities and 40% bonds and treasuries. The new adjusted advisory states 60% equities, 20% bonds and treasuries, and 20% gold and silver. So you've got, as you can imagine, trillions of dollars out there that are now going to start flowing into gold and silver. Now keep in mind that when these pension plans and banks and IRAs and 401ks, when they buy gold and silver, they're not buying physical gold and silver. They're buying contracts through the COMEX. It's similar to a stock in its trade. It's not backed by gold and silver, but it is priced based on current market pricing of gold and silver. So that enables a lot of money to flow in, because if it's all physical purchase, there's no way they could accumulate that much in that shorter time. So by buying paper through the COMEX, it allows a lot of flow of money back into the gold and silver market, which is why you're seeing these prices push up. And because it's going to look like it's going to be a part of the actual portfolio management strategy, it's probably going to be consistent from this point forward. Not saying that we may not see some more volatilities and up and downs, but for the long term, for the consistent growth, I think we're going to see it do above its standard. And the standard for gold and silver is inflation based. So basically, you take inflation, you look at gold and silver, as a minimum, it's going to track that because that's the devaluation of dollars. What inflation is a devaluation of currency, where it costs more money to buy a product, gas, whatever it may be. Well, gold follows that because it's dollar base. So as the dollar declines, gold and silver increase based on that decline. Well, then when you throw in demand, that's when it really starts making its movements and adjusted to real market value. And that's what we've been seeing over the last couple of months.
So, and another thing you've been seeing last couple of months is a whole bunch of people coming in to sell.
A lot of people are taking advantage, of this upstride. I think the mental thought is, I paid this for it. It's up. I'm going to sell it and make that profit. And one thing I do advise most all my clients is there's a purpose behind gold and silver, and that is to retain your purchasing power at the time you decide to spend the money. So just because price is up doesn't necessarily mean it's the time to sell. But if you do want to sell and you have purpose for the money, you have other things that you want to reinvest in or purchase or go on vacation or whatever it is, now is a good time to liquidate that and turn it back into cash to go spend. So, yes, we're seeing a lot more selling at this point. I do advise everybody that comes in that sells, I tell them the same thing. That is, great, sell it if you got a purpose for the money because you're going to utilize it, and whatever you paid this 38, whatever you're buying now and getting 90, whatever spot price is today, then you basically are buying that other product 60% less with your dollars that you have today versus what you have vested. So if something's costing $1,000, you're only paying $300 for it, $400 for it, because the additional is the upside of your product that you bought back when you bought it in order to secure. So in those situations, it makes a lot of sense to sell. But the long term, I think you're going to see consistent upside to gold and silver over time. But it's definitely a seller's market per se. We're seeing a lot more selling compared to purchasing as a percentage than we have in the past.
Excuse me. So, but it has never been this high. And I guess the people that come in and sell, they're kind of gambling
Yeah.
that it's not going to go any higher.
Well, I think most of them that I talk to know it's going to keep going up. But I think they have a certain fear from it being pushed down, or manipulated down before it goes back up again. And so, again, I think most people that once they communicate what they're doing, make a decision based on their needs for now. But I don't think that they're selling because they're afraid it's never going to go higher. I think it's just a situation where they see it as high as it is, and maybe they've got other things they want to reinvest in or do, and so they're taking advantage of profit taking at that point.
So I guess you've been buying a lot more than selling lately.
Yeah. Yeah. Historically, it's about a 70-30. Historically, you're selling maybe 70%, as retail buyers purchasing, 30% of people are selling, because it has been so flat and just kind of people set on it. Now it's probably reversed that to 60-40. 60% of the people are selling, 40% of the people are buying. And if you look at gold and silver for the term, accumulation is what it's about. As you get currency that you're not going to spend in the near future, that's the currency you want to reinvest back into gold and silver. Because again, the primary purpose of gold and silver is to protect your wealth. Okay? So that means that dollar you're making today, that you're working hard to earn today, has the same purchasing power when you get ready to spend it 5 years or 10 years down the road. Holding dollars, you cannot accomplish that. You're only going to have to put more dollars with it to buy the same thing as you go, by devaluation of the currency. But again, silver and gold, $10 of silver today, if prices double, that same $10 will buy the same amount of product 5 years from now at double the price. Whereas if you had $10 you put in the savings account and you go to spend it 5 years, everything's doubled, you got to put $10 more with it to buy it. So the real value is holding until you're ready to spend the money.
So, are you seeing a lot of people come in to trade their silver for gold?
Yeah, historically, the historical margins between gold and silver has estimated around 30%, okay, 35% over historical time. Meaning 30 ounces of silver was equivalent to about 1 ounce of gold. Since 2012, that spread started really spreading out. At one point, we were 101 ounces of silver to equal the 1 ounce price of gold. And so now that spread has come back, meaning right now we're around 54 ounces of silver to equal the price of 1 ounce of gold. So that means that if it was 100 ounces, that silver has upside 46% higher than gold's upside has been since this run up. Okay? So taking the silver and flipping back into gold, you're taking an additional value of income against that silver, and you're flipping it back into gold that's a more stable, side. It's something that everybody that wants to do that has been waiting on this opportunity. So it's kind of like everybody said, when silver hits 50, I'm selling it, because that was its all-time high before. You have people that say, if silver ever gets to below 60, spread, I'm flipping my silver into gold. There's not a real preference, in my opinion, personally. I think that silver still has much more upside over the long term than gold, just because it's been suppressed so much more over the last 15 years. And but if you are going to flip, it's a good time to flip, because it's probably as close as it's been since in 10, 15 years.
So, you seem to be pretty well stocked up in silver right now.
Plenty of silver and gold to go around. Yeah.
All right. Well, thanks a lot for talking to me and all
You
the
bet.
information. Appreciate it.
Thank you.